So if you're thinking about getting into the stock market, this is the video for you. If you haven't gotten started in the stock market and you have a lot of doubts on like where to start, how to start, stuff like that, this is the video for you. Why? I've been investing in the stock market more than 10 years. And when I started investing and I was down my journey investing, I realized that I was leaving my peers behind, right? Like when I said I was leaving them behind, they weren't that far behind because people were asking, oh, where can I buy stocks? What stocks should I buy? That type of information, you're not that far behind. And I realized that to close that gap, people just needed to know information. It wasn't how to trade, how to do this, how to do that. It's just that fill in that gap, right? And I started the journey back in November 13th, recording myself, uploading them onto YouTube, what the journey looks like if you have little to like $500 to invest in the stock market. And what does that look like? And so far, the journey has been looking great. Let's look at the 3 month graph here. As you guys can see, looks kind of like a roller coaster, but as far as the market conditions that we're in, we're at war with Iran and all this great stuff. I'm still protecting my portfolio. As you guys can see here, I'm down on just two stocks, 1,600. But if we look at the year, I'm up $168. So this journey is for those who want to get started in the stock market. Don't know how to get started. Don't know necessarily like I want to call it a strategy, but a foundation that you can create in order to keep the longevity in this game. Because trading and stock market, all that stuff, that comes from like time. You got to put time in. You just can't just wake up one day and you have a whole bunch of money and you're just gonna invest. This is this is a journey, guys. This is something that's gonna take some time. So if you are new to my channel, I recommend you go ahead and watch my other videos. That's number one. If you already been watching my videos and you haven't downloaded the Robinhood account, go ahead and download it. The link is in the description. Go ahead and download Robinhood. I like Robinhood because it's the interface is super easy, super clean to understand. But there are a bunch of other brokers out there that are highly recommended. Once you get your Robinhood account, the next thing what I'm gonna want you to do is deposit money into that account. It could be whatever you have. It could even be $1. But whatever you're gonna deposit, I need you to deposit that amount consistently, whether it be weekly, daily, monthly, it don't matter. I need you to just do it on a consistent period of time. And once you do that, I need you to find stocks that you already are investing in, stocks, companies that you're already buying their products and services. Apple, Microsoft, Google, the list goes on. And find good name stocks. Just don't find stocks that, you know, that just came out of nowhere. Once you're in that starting out phase, once you already get your portfolio built out and stuff like that, then yes, you could take some chances on some other names. But for the meantime, you want to invest in names that you already know. So, ladies and gentlemen, with that being said, let's go ahead and buy some stocks today. Bank of America. How I like to buy my stocks is there's a thing called cost averaging. What does that mean? So if I bought one thing for $10 and I bought that same thing for $5, if I do average, it'll be 10 plus 5 is 15. 15 divided by 2, which would be 7.5. So my average cost would be 7.5. Same thing, average cost. So my average cost for Bank of America is $47.22. So I'm not that far off from breaking even. Right now, I just broke even right in front of you guys. So I'm not gonna buy into Bank of America because I'm not making anything. I'm not getting no more stock than I've gotten previous. Here, SPY. My average cost 666. We're gonna get some more. We're gonna get $2 worth. We got $2 worth. SPY. That should definitely drop our average cost. There you go. Because that 666 is not looking pleasant. I don't like that. I don't like that. I don't like that. All right, cool. So we got some SPY. We're gonna get some lows. Lows is up, but we're still down. So balance out this average cost here. We're gonna add $2. Add $2. Bring down our average cost. And then when I started this journey, guys, I literally started with $1 too. Like I didn't start with all this money that's in the account. Like I started it with $1. So I highly recommend you guys, like I said, watch my previous videos. If you guys watch my previous videos, you will see how the journey came along. It wasn't just overnight. I started this journey, this YouTube journey with you guys in November 13th of 2025. So this is not an overnight thing, ladies and gentlemen. What did I just buy? I just bought some Caterpillar, and then some Nvidia, had some Nvidia, that's some Nvidia. Um, Microsoft definitely added some. I'm getting punished on Microsoft. I'm getting punished. Add $5. We're gonna do percentages now. Percentages. $5. $5. $5. Next buy will be $6. $6. $6. $6. $6. $6. So about $5 worth of Microsoft. That's some Google. Google. That's some Google. Oh, that's some Google in there. I probably won't add. I don't know. I should add to the mining company that I have. So I have the metal mining companies. I have gold, copper, and silver. But I'm gonna chill out. I should buy more. I'm just gonna chill out because I literally want to exit out this position. So I'm just gonna chill out for those. But I have some plays that I want to go over with you guys. That's what's keeping me in this game. It's keeping me in this game. And this is for people that have a little bit more money to invest. If you have about like $5,000 to invest, when the market is down, these are strategies to help you to like keep like your portfolio protected. I haven't been talking with on mic. That's crazy. So with these strategies, these could protect your account balance. As you guys can see here, I'm down $1,600, but nowhere in my account. Like you guys can see the history. Nowhere in the history does it show that I was down 1,600. Like, and if you guys see this, you guys see this 9,000. These are I withdrew. Like when you guys see this flat line, that means I withdrew. So all these flat lines, I withdrew. So I withdrew up here. I started down here. I started bad, came back up, and I withdrew here. And I started here. So I'm not down. There's no way I'm down. Why? Because there are certain strategies that I implemented to protect me when it comes to a downside. So for example, I have a covered call here on Intel. A covered call is me selling a call option on a stock. This call option expires this this Friday, April 2nd. For doing so, this is the option strategy. I am forced, if Intel is above $40 at the end of expiration, April 2nd, this Friday, if it's above $40, I am forced to sell my 100 shares at $40. So if Intel is at $41, I have to sell my 100 shares at $40. Now, for doing so, they give me a $363 credit. $3.63 per one share. This is 100 shares, so I get a $363 credit.
I did this. I got this option contract back on Friday before the market closed. Right now, if I wanted to cut this contract, I would gain $174 out of the 363. Now, my goal is actually, or what I want to happen, I actually want this to melt. I don't care what it does. I actually want this to stay to go under 40. Why? Because I get to keep the credit. I would be able to keep the credit, and that means I get to keep the 100 shares. So, yes, the stock is going down, but I'm getting credit. I'm getting money for doing so. Like, what strategy do you guys know that when a stock goes down, you're holding the stock? We're not holding options. We're holding the stock. You're holding the stock, but then you hold the option and the stock goes down, but you're still making money. Like, what other strategy can you do or find? And it's not a strategy that I made up. It's not something I'm here to tell you guys, oh, guys, I created this strategy. No, this strategy is out there for you guys. It's just we need to balance out the portfolio when we're investing, right? When we're having a bad month, we're at war, whatever the case is, how do we balance the portfolio and not bleed out? So here, another one, 167. And this expires next week, Friday. So I have just in credits that I can claim right now is like over $300 in credits, right? And I've been doing this every single week. So right now is just $300. Just this week alone is 300, and then I'm down $1,000. So if I were to collect my premium right now, it's $300. So technically it would be $700. But like I said, I've been doing this for a while. Another protective play I have right now is I bought the put. I bought the $45.50 put. I bought it for $383. So my goal is to make about $383 for this put. Then I bought a put today. I bought a put earlier today. I bought it for $650. I need to make about $650 in credits between these 100 shares. So I need to make about $1,000 in credits. Why? Because that's the amount of money I spent on these puts. So if I were to obtain like $1,000 in credits with these covered calls, they would pay for my puts. And if the stock is under my puts, I can look exercise my options. So I can exercise them, and what that means is right now the stock price is at $41. But if I wanted to exercise my puts, I would sell it back to the market at that price. So I have the 45.50 put here. So I would sell Intel back to the market at 45.50. And this one, I have the 46. I would sell the 100 shares back to the 46. So if the stock stays down, I keep credit, I keep my 100 shares. Stock stays down, my puts gain value. Stock stays down, I get to keep the 100 shares and I get to rinse and repeat the covered call option. And then eventually, when I get to expiration on my puts, hopefully I've gotten so much credit that I can either sell the shares back to the market or I could just sell back my put and just get the profits and average out the account. So now I have multiple layers within my strategy. It isn't just buying a naked call, buying a naked put, buying just shares and just sitting on them. There are strategies that we can integrate with our portfolio to hedge and put ourselves in a better position no matter where the direction of the market is going. So, ladies and gentlemen, I missed these last couple of videos, so I do apologize. I had some technical background difficulties, but we got them all sorted out. So, ladies and gentlemen, today's Monday. That means we have the rest of the week, and I can't wait to show you guys these expirations just to show you guys. Like, if you've been watching my videos, you watch these last couple of videos, you would understand what I'm talking about because I'm down. I'm down $1,600, but the account's still the same. So Thank you guys for watching. We see each other Tuesday. We have the rest of the week, and take care.